All right. Cool. So DXY. All right. Super weird. All right. We're in a very weird position to be. Well, I think it's a very weird position to be in. And the thing is, I don't think we're gonna have so much more opportunity before it's gonna give us the full-on move. So here's the thing: the reference, right? Right. Obviously, looking at our final range, you consider that one or that one, doesn't really matter. Right, for clarity purposes, we can do this. Right, we know we're bearish. Right, so we know any move to the upside is considered a quote-unquote pullback. Right, and from this perspective, from this time frame, this is your point of invalidation. So here's the thing, right? Something that I do, right, that how I reference the beginning of a pullback, right, is when essentially, like, for example, if we're looking at this time frame, the only way for me to consider a pullback has started is if that immediate level of structure has broken, which it obviously has there, right? So as soon as that broke, right, I know that we're in the pullback phase of our pair of whatever we're trading, right? So from there, obviously, we're gonna start zooming in. Right, so I've acknowledged that this has already started. The pullback has already started, and obviously there is internal structure, right, inside of this, right? So what we've acknowledged is the fact that this is broken structure. We have already taken out this low, even though our immediate high has been taken here, right? It's good to notice, right, that our structural leg is here, our full leg is there. So even though we took this out, right, in order for us to consider bullish structure in any way whatsoever is if we break this high, right? But so with that being said, right, there is it's a pretty weird situation, right? Because even though we broke structure here, right, we've actually mitigated daily 50% right there, right? H4, I'm sorry, not H4, H12 inefficiency has been filled there. H4 inefficiency has been there. And H1, was it H1 or H2? I believe it was H2, right? But either way, we'll come back to H1, right? Because there is a wick there, as you can see. But anyways, the H2 inefficiency, pretty much perfect, pretty much straight up perfect right there. So because it's so perfect and because it reacted, right, with an immediate break of structure, right, this is now to me considered a tough to show a 10 because it's supporting our overall move, right? Our structure leg that took out that previous leg, which is being supported by the fact that we have our bearish legs still intact, right? So even though this is seen as a bullish break of structure, in theory, your ideal direction is still down, right? But, right, there is still ways for this to completely invalidate itself, right? Like, for example, once you start going to M30, right, the immediate, place that is, appealing to me, right, is if we're reading order flow, right? We see impulsive move here, right? You see inefficiency there. That was tapped, and then that was mitigated, and we now have the wick of reference, right? The wick of reference is there. So I would prefer to see, option number one, right, is I would love to see the pullback before we reach the POI. What the hell? Well, how does this always happen? I don't know what button I'm clicking, but all right. But right, if we come to mitigate here, right, and we break structure to then come here, then I'd more so assume this to be bullish. But it obviously always, it varies based on what happens here. So it's a weird predicament to be in because the only two essential potential POIs kind of per se, right, that I can even think of is this right? This is my high probability, and this would be my deeper retracement, and then there's still inefficiency here. I believe that's H4. Yeah, H4 inefficiency there. But that inefficiency is irrelevant to me because I'm trying to catch order flow. So the thing is, right, is in order, in my opinion, in order for this to be considered a break of structure, right, an overall break of structure, we'd have to not mitigate there, but we'd have to not break here, to not break that bullish order flow that is intact, right? So theoretically, right, this is your typical setup, I would say, right? Bullish break of structure, immediate POI, even though you are sitting, in that around equilibrium, probably a bit closer to the premium. Even though that's the case, that's what makes the most sense here, based on what we're looking at the screen. But when we zoom out, we understand that we're potentially playing inside of this potential range here, right? So it's weird, right? Because they can go either way. We need to essentially make our moves based on certain catalysts. So if we come back to mitigate, right, or even mitigate the 50% of anything here, right, then it's a completely different story, right? But I would love to see this here be taken out, because in smaller time frames, right, you could see, right, the reason why I'm looking at the order flow here is because this is an interruption in price, right? Interruption in price, potential turbulence point, and this could potentially come back to get mitigated. So I would love to see this break, because then that shows a disruption, right? But then if it breaks from here per se, right, then this would be my high, this would be my low, and I'm trying to look for the continuation here. So if that happens, it does not make sense to want to play this inefficiency, right? Which is why I always play inside of the immediate range, right? And I like to follow order flow. But right, it's 50-50, obviously based off yesterday's daily closure or today's daily closure, right, we are still, the potential bearishness is still intact, right? I just hope that this is a type of bull trap, and that actually is the real cause to the downside move. But at the same time, it could very well give us another candle like this pretty much here, and that would completely override the entire bias, right? Which is why it's good that from EURUSD perspective, we're already, some of us are still in from here and some of us are in from here, right? So, right, I didn't trade London last night. I left a limit. Let me show you guys where I left the limit. Okay, so from the daily, okay, we already know that this is what we talked about last week, I believe. I don't 100% remember, but we were talking about the 50% of this candle potentially being a catalyst, and that it, we said that it really matters on how we react, right? And I love this reaction because it really is favoring that bullish side, and we're reacting from a heavily confluence POI, whereas by that I mean it's the daily 50%, it's the H4. Is there an H12 here? Almost an H12 inefficiency failed, but there is an H4 inefficiency here. The red line was 50%, right? That was actually where the limit was, at the 50% of that, and then stop loss right below the fulfillment. And the cool thing here, right, is if you zoomed in, right, there is actually an efficiency here, right? So the 50% of that is this orange line, and that pretty much hit to the T, I believe. Yeah, it did, right? So this was pretty much the position here. It was like 6.5. And yeah, so the cool thing here now, right, is we've had the initial break of structure. So we've had the disruption of bearish order flow. Now it's just a matter of knowing whether or not this is just a pullback, or if it's the start of the overall leg. you know, playing out. And I honestly see both scenarios playing out. I have no preference, right? Because there's so many ways to look at it. For example, this could be seen as a break of structure, pullback, continuation, right? But that is without considering this, right? Because if we consider this and we consider this a bullish mitigation, right, then this low has now taken out structure there, right? And this could be the pullback, the discounted pullback for that upside move. And where have we seen something like that before, right? A pretty, you know, deep retracement like that, right? So notice here, I'm just pretty much paying attention to the characteristics is, you know, for example, liquidity was cleared, POI was attained, and we're now reacting. I think that it's very similar to kind of here, because for example, right, we had the disruption here, the bearish break of structure, right, but then this was the POI at hand, right? The POI at hand, right, even though it reacted from it, this was now considered bearish because the disruption occurred here, which is why it had to give a pullback, unwillingness, right, and then gave a initial break of structure to then give a final mitigation here, which then produced an upside move. So what I'm pretty much referring to here, why is this? Okay. So what I'm pretty much referring to here is this, where we saw something here, and we saw the liquidity be taken out, right? Because this was taken out, right? Even if it's considered a liquidity grab, this is now considered bearish, right? So we had to get that pullback, and then we had to obviously get the unwillingness to happen there, right? Well, obviously the unwillingness here happened before that full pullback, right? So technically this was the unwillingness to begin with, then the pullback, right? And then the unwillingness that failed to break the previous unwillingness, which generated that bullish movement. So it's like we can very well see something very, very similar. Here, right, where we're essentially, where we've essentially taken out liquidity, even though we're reacting from a high probable POI, right? This is only the start of the pullback, and we could easily see, you know, any type of wick rejection, right? Preferably, I'd like it to take out this high, and I'll tell you why in a bit. But that could happen, and then you could have, you know, what just happened previously, where you have the unwillingness, and then the unwillingness again, and then that's when you see the upside move. And that makes a lot of sense to me, but, you know, obviously we don't have enough data to make that type of assumption, right? So for the most part, because I've acknowledged that this is a bearish structure break, even though the entire leg is still pretty much bullish, right, I'm still going to look for that hedge position on top of those continuations, right? So just playing off H4, right, that wick is extremely appealing because you obviously have an inefficiency fill, right? You have the wick, and then you have the downside move. So this is probably going to generate a reaction if order flow is meant to be bearish, right? Because if this breaks, then I see that as disruption, because now even though their POI is on top of here, if you get a disruption, an unwillingness, and a strong reaction, then that theoretically could, you know, start, you know, aiming for, you know, obviously this high, and then obviously start aiming for this high, right? But, you know, it all depends on what happens based on the reaction, right? So it could either come here, react properly, give you a proper scenario during London, which is probably when this is going to happen, either late London or early New York. It just makes sense based on where we are, and then based on what time it is right now. So who knows, right? It's extremely 50-50. And I hate saying that because it's, you know, it sounds kind of stupid, but no, that I sincerely think it's 50-50 right now. It really just depends on how we react. If we even make it up here, right? Obviously we can start pulling back now, preferred, and then get a set up London to then give you that, because then that's considered a bullish break of structure there, right? And even if we react here, right, then you could still get an opportunity inside of a discount and then take it higher, right? So it really just depends on how price manifests itself to then pretty much try to make a play off it, per se. But yeah, other than that, I mean, GU hasn't done much since this weekend, right? 20, yeah, right here, 26. Yeah, nothing much. I know some people learn longs from here, right? The inefficiency fill there. I think Chris is in that. I love that setup, just because I love seeing this. Right? Essentially the liquidity point before that, because then this creates an unsupported move, right? Where, you know, the bearish diminishment is extremely obvious, right? And even here, the bearish diminishment increased, but this did not, you know, give you a substantial move lower. So I know Chris is in that. That's a very nice trade. Very nice trade, right? Because this pretty much exemplifies the entire selling climax principle, right? That's theoretically what you want to see, right? And this is actually something I see in gold a lot. Let me see if I can find something. Ooh, what the hell? This one's too is an interesting one, right? We were talking about this weekly, right, wick here, and we're reacting from it. So who knows? Like, you know, who knows? I'd love to see this, you know, give a decent opportunity. I love that daily closure, right? And if we can get a decent opportunity, this one can rocket. This one's a big one. Especially because I like this, right? See, like what we were just talking about, right? Selling climax, right? Continues lower, diminishment of volume, extremely big diminishment, right? Unsupported move, right? What does this cause? Right? A liquidity grab. Why? Because we took out the previous low, reacted, broke structure. This is now liquidity grab, right? And we now see this, right? So theoretically, I would love to see either something happen there or something come into this wick there. So it's pretty simple, but I know this is countertrend, right? But I'm only even considering this, right? Even though we're still bearish, right? The only reason why I'm still considering this is because of the reaction, right? Because remember, we are in that, you know, wick, and I don't know if this mitigated anything. I haven't checked. Okay, so mitigated. Okay. What the Alright. I might actually consider getting a new keyboard now. This Magic keyboard is not good for a PC. But yeah, as you can see, that reacted from there. There's obviously inefficiency there. There's obviously liquidity grab at play here, right? And that's also signified through this daily. So we can easily make a recovery back, you know, even 400 pips away, which is pretty cool. So that's one to spectate for sure. I'd love to see this, you know, start giving us upside, right? And the cool thing is like this is such a big move. This is just gonna, you know, once we break out this high, that's now when you have your conservative entries, and you have so much room to play with because you're aiming for liquidity. The only thing is like you can't aim for this liquidity unless we have shifted. So, right, I've been super hesitant on even looking at this, right, which is why I haven't even wanted to sell it, even though a lot of the sells have been extremely textbook, right? As you can see here, a very nice trended market. Right, very nicely trended. So it's like, you know, it is what it is. But yeah, do you guys have any questions? Any questions? Anybody? Where's my phone? Okay. Yeah, I'm tired. We don't have that many people on today. But yeah, does anybody have any questions? Cool. Anything you guys want to talk about? Anything you guys want to touch up? You guys, for the most part, don't even have questions, but any topics you want to talk about? Because this has only been, yeah, it's only been 20 minutes, so. About liquidity, what is the question?
My question is like how do you know it's taking out liquidity versus it's just like a lower low and then it's gonna make a higher low and then another lower low?
Wait, I'm sorry. Can you say that again?
Like, let's just say, for example, I'm gonna annotate real quick. Like, how do you know that this exactly is a liquidity grab versus, it just being, that?
Because okay. So for example, all right, hold on. I've referenced this POI, right?
Yeah.
Keep in mind though, I didn't make a play based on that yet. I haven't made a play yet, right? Because I still am considered, setting. I'm still considered picking a low. Okay, so this is my original POI, right? My weekly POI. I didn't want to, because it's such a big POI. I didn't want to really dive into it too much until I had signs of a potential reversal. So I didn't want to come here and point out POI, 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 and then try to guess that low. So I'm letting this show me something, right? And so the cool thing here, the only way for this to be fully considered a quote unquote liquidity grab to me, right, would be to break this high, right? Because if we break this high, right, you notice that there's a high here in the wick that pretty much push up to then create a downside move, and you see the same thing here, right? That even took out a previous wick there, right? So that shows two potential places of reversal, right? As you can see, the first one is currently in play, so this could still theoretically happen, right? So the only reason why I'm considering it that, right, is because we have high volume selling Climax, right? That's a very climactic move because we have extremely high volume, extremely high momentum, and we're coming into a POI. So now that we're in the POI, right, just because we had the reaction, right, we are still bearish, right? Just like I said. So we have now essentially taken out the previous low. We have not created a substantial low because look at the previous lows, right? The previous lows, we made a substantial new lower low. But that didn't happen here, right? We saw pretty much a strong move to the downside, right? Where we saw even a very big, H1 candle here, but it's on unsupported volume, right? The unsupported volume has now essentially created an unwillingness to want to continue lower, and it's pretty much caused this diminishment here, which has now caused this internal break of structure, right? So even though the leg is bearish here, this could be easily seen as a major intraday leg. Now this minor intraday leg inside of the major intraday is now been taken out, right?
Okay.
So I only consider it a liquidity grab because it's broken the immediate first level of structure. It's taken that out. There is high volume here. We're inside of a weekly POI, so I have a lot of confluence to make that assumption, right? But just because we have the liquidity grab here, it doesn't mean this cannot just reverse on it. You know what I'm saying?
Yeah. And is that like the case for, like, let's say, for a lot of, liquidity grabs? Like if you were looking for a reversal?
What is?
Yeah, everything you just said, like the POI and then
Okay, well, what did I just say?
the diminishment. I'm sorry?
What did I just say?
That it could easily just not.
Like what did I just point out to you though? I just want to see if you're paying attention to me, because I want you to be able to use it yourself. So what were my reasonings behind why I consider that a liquidity grab?
So first off, the diminishment of volume, it's, in your point of interest, and then it took out the little minor, the little high broke structure.
Mm-hmm.
And yeah, I think that's it.
Yeah. So like the thing is, right, order structure still bearish, order flow still bearish because we've reacted here, right? So if we come here and let's say we come tap again and then we start coming back lower, then I'll see that as a quote-unquote unsupported move because we've already mitigated here. And if you come to mitigate again, then that shows weak bearish order flow to me, so that, you know, inclines me more to want to take a position. But this is, you know, obviously I'm still reversal chasing because I'm trying to play based off of this. Right? Yeah. Theoretically, if you really want to be conservative, you need for that high to break. If that high breaks and now you start looking for opportunity, your potential percentage, obviously, well, not obviously, but percentage of, you know, winning a trade is a whole lot more significantly greater than it would be now, because I haven't let the structure break.
Okay, cool. The reason I asked was because that message I sent you on EU, that I was just watching, and like I knew there was a POI to the left, but I thought it, you know, it would just react and then continue.
Yeah, but here's the issue though. Here's the issue though. People want to take a position when they see a scalping, you know, break of structure after an H4 POI. Right? But it fails because your minor intraday is still, you know, the opposite direction, which is why you want to be essentially as conservative as you can be. Right? Obviously I'm not like that. I'm a lot more aggressive, but keep in mind these are my rules, you know, like I see this stuff, you know, like I've seen this stuff for like a year and a half now. So it's like, it's completely different because I have the experience factor that a lot of people don't, right? So I see things differently, right? And which, you know, that doesn't mean that you don't see stuff that I don't see, which could benefit you more than it would benefit me, right? So it's completely subjective. So here's another example of a liquidity grab. Let me show you. Right, so we saw the H4. We saw the H4. You could even say the open there was tapped, right? So this is now your POI there, right? So if I want to make a play based on M1, right? This is still bearish, right? So I'm acknowledging that if I'm going to take a trade here, I'm pretty much trying to pick a low, okay? So if I'm here, right, I'm bearish, right? I now see this right here, and then I see this move here where we pretty much, I swear this took liquidity. Why is this? I think it's this broker. 1 second. Because on my MT4, that looks so much different. Yeah, see, I don't know. I might start using OINDA a lot more often now because this is super annoying. All right, so we just acknowledged, right, that we have our structure there. So we have equal lows, right? Equal lows. Price came back, right? Even though we had the BOS there, we're still bearish, right? So here now we came back, we took the liquidity, and we took out the micro structure there. The microstructure there is now taken after the liquidity grab, right? Which then creates, you know, obviously this reaction, which then leads to a new higher high. So conservatively aggressive is technically ideal here. And if you were going to take a position, right, I wouldn't have taken it here. I would have taken it here. Right, if I'm playing based off of this, right, we just took out liquidity, we took out a level of structure, right, we came back here, we tapped this inefficiency that's there, right, and then created a higher high. It's not the range I'm playing in, right? So if you look at M1, right, the inefficiency fill is there, and you could easily take a position off that inefficiency fill.
So what if you were looking at it the other way, where it looked like a downtrend and you're looking to continue that trend, and
well, is this a downtrend?
Overall,
is this a downtrend?
Well, no.
Then why are you asking me that? I'm only playing based off of the fact that I'm knowing that this is bullish.
Yeah.
Which is why I haven't, I've sold EU probably 2 to 3 times the entire time that we've been ranging up here. Like legitimately 2 to 3 times since we've been here. I've only ever sold it like twice. Right? And that's because I'm still overall bullish. And because I'm a swing trader too. If I was an intraday trader, I would be selling this like, every other day.
Yeah.
So it's like, look, if you're trying to find a continuation, like for example, the scenario you showed me, bro, was that gold?
No, it was EU.
EU.
Yeah.
Right. So you're selling, right? I don't want to pull up your messages, but you were selling, right?
Yeah, I just thought
that
like
went up
from that.
But yeah, bro. But where was that sell derived from?
So pretty much the way I saw it. Again, I haven't really been on the Zooms, but the way I saw it was just like, just trying to annotate. But anyways, it looked bearish to me, just from intraday. So I was just looking at it, and then I'm like, okay, it would react from here, and then it should continue lower. But instead, I was looking at it in a bearish perspective, and instead, I don't know, it was a liquidity grab, and it went.
Yeah, but you also got to keep in mind your target hit. That's what you have to consider too. Like your target hit. Like see, I think I found it. This is 10-minute, 89.7. Let's find this. 89.7. Here. Okay, yeah, you sold here. So even though this happened, right, you couldn't anticipate this to happen, right? You were obviously still trying to find that continuation. But if you're trying to play, right, so your play was here. I know exactly where your play is. You played this, which is completely okay. It's just completely okay. But you also got to keep in mind, your target hit, bro. So you're either scaling out, you're at least break even, right? Because you told me you took a loss here. So it doesn't make sense for you to take a loss if your initial structure right there and you're...
I didn't even trade. I was just looking at it.
Okay, cool. So now that I'm looking at it, right, let me see. Right, based on the time frame you're on, you couldn't see what happened, right? So I'm looking here, right? We have our pretty much our liquidity taken, right? The liquidity was taken, immediately reacted. This momentum is extremely alarming, also because we broke this area here, right? Whether that's the wick here, whether that's the inefficiency fill, whether that's a 50% of whatever seconds time frame is here, right? This general area price has to react from in order for me to theoretically believe this is going to continue lower, right? And if it doesn't react from there, then I'd prefer this, right? But obviously we took this POI out, right? And then reacted, showing that this is a disruption, which means that this theoretically does not make sense for it to continue higher. Right, on top of strong momentum, on top of the fact that we had just taken out liquidity, right? So we took that disruption, that initial break of structure here, right? That automatically makes this a liquidity grab, and that automatically makes that a POI, right? But this is still reversal chasing, but you still have to be able to acknowledge it. So if you're selling here, it makes a lot of sense to buy here. And you see if you would have held that, you would have caught the entire sell-off, that's actually kind of around where we sold, I think. 854 on the 25th. And you also got to keep in mind, you're selling at the straight up bottom of this move, right? You're selling in a deep discount, because even if the sell-off didn't work and we reacted from here and then we continued lower, this is still not a position I would take, but it doesn't make sense for me to want to make a continuation this low after this big of a move. So that's more of the intuitive side, which I can't teach you.
Yeah.
Right?
Yeah, after you explained what you did, I was like, oh, because in other words, I was trying not to chase reversals and just go with the flow.
Yeah, but you also got to keep in mind, bro, like you don't sell low, you know what I'm saying? Like,
yeah.
Let me see. Yeah, see, literally where you bought, that's where we were trying to sell because of what was happening and because of this understanding of this range, right?
Yeah.
So
when you posted, or I forgot if you did post, but that you sold there, I was like, what?
Yeah, see, so it's like here, right? This mitigation here is in play, right? To the upside, we mitigate this, break this. This is a disruption of order flow. The initial structure break there, right? Those aren't the same thing, just so you guys know. That's not the same thing. So now this would be my point of invalidation, right? Because we just came here, right? We took out a high, reacted, gave unwillingness, broke structure. After this is now quoting to me a potential distribution, a potential liquidity grab, a potential reversal. So it's very intuitive, bro. Like that's all I can really tell you. It's very intuitive, and you have to be very picky with what you're trading. Like for example, the disruption rule. The only reason I came up with it is just because I've been trading. Right, even though I've been trading the exact same information, I notice new stuff every single day. And I think one of the twins said something like that in the Discord. Let me see if I can find that. If it's pinned, it should be pinned. Here. All right, in the Discord I said read this. Right, and that's extremely beneficial because at the end of the day, right, I can show you all this cool stuff. I can come up with new stuff that I see, but it's like it really won't do you any better if the foundation isn't there. So I'd say your best bet right now is to focus on trying to get a decent foundation.
Yeah.
And then from there, obviously build upon it, right? And only you know how much work you're putting in. Like I'm not accountable for you, you're accountable for you. And obviously, you also gotta know too is like you're gonna lose. Everybody loses. But yeah, question: do you know why everybody loses? Let me see who knows their stuff. Anybody in here? Does anybody know why we lose, even if we follow the rules to the T?
Is it because the market does what it wants?
No. No. I mean, everything's already priced in, so it's not that it does what it wants. Everything's already there, But no, I think people that say that just don't know, what they're talking about for the most part. No offense.
No, none taken.
But that's just like my opinion on people that say that. Yeah, but does anybody in here know why we lose, even though we are trading? I don't want to say institutional concepts, right? Because we know that's not what it is. But even though you trade quote unquote institutional, why do you still lose? If you know where the banks are, why do you still lose? Right? That's not what I tell you guys, right? I don't say that the banks this and that, right? But I'm just putting it into perspective. I'll straight up I'll sell you $25 if somebody can give me the answer right now. I'll sell you $25 right now if anybody can answer that question. Let me see. Is anybody? All right, so nobody knows the answer. So do you guys want to know the answer? Account size, deep pockets? No. Do you know why we still lose even though we use the concepts that we use? That's the question. No. I said even if you follow your rules to the T. Even if you follow your rules to the T.
I want to know.
What is an SC? What is the definition of an SC?
Sponsored candle.
What's the definition? Somebody just told me the definition. And it should be on the website, unless I'm tripping. I'm pretty sure that was in the notes. Because human's not perfect? No. Maybe I'm wording the question wrong, but the point will make sense once I say it. Alright, alright. Did we not put it in the notes here? Okay, cool. The definition is there. All right, somebody read me the definition, please. And thank you. There's one word that I'm looking for here. There's one word. And I'm literally showing you the answer in front of your eyes, but...
Liquidity?
No. It's in the definition, bro. It's in the definition. No.
Mitigate.
No. Are you guys no, but all right, cool. So this is all right. Let me see. Somebody gave me an answer. All right. Let's see. Okay, yeah. You gave me the definition. So what? There's one word in the definition that I'm looking for. I'll sit here and wait for like an hour. I don't really mind. There's one word in the definition that I'm looking for. This is like some high level critical thinking. Like this is why like the concepts make sense to me. This is like what I'm about to explain. This is why everything makes sense to me.
Is it because
I'm looking for one word. We'll start there. I'm looking for one word in the definition.
The only one I think that makes sense to me is inefficiency.
No, bro. Look, what is the question? Somebody tell me the question. Okay, footprints is a word, but footprint is not in the definition. What is the word being used instead of footprints?
The remnant?
Exactly, the remnant. So what is a remnant?
Like what's left behind?
Mm-hmm. A footprint, right? So let's say you're out with a friend, right? Let's say you're out in the woods, and you have to take a phone call, whatever. Your friend goes forward, right? And there's multiple paths, right? Multiple trails, right? So if you see a footprint, will you be able to exactly find where he is?
No, you need more.
You need more information. You need more data, right? So if you know where an institutional candle is, if you know where a candle is, right? A sponsored candle, a whatever the fuck candle you want to call it, right? If you know where the candle is, right? And if a candle follows the criteria that you're looking for, does that necessarily mean that there is a quote unquote high volume position there?
No.
Exactly. Right? So you don't know. We're just playing based off of clues that are given to us, which is why smart money concepts was then derived to then become high RR, right? Because people went from studying candles themselves to studying the reactions, right? And whether that's because of me, whether that's because of the next guy, cool, whatever, right? But it's because we understand the footprints that we win trades. But at the end of the day, we don't have like a Bloomberg terminal or anything like that, any type of terminal to begin with that'll give us, exactly where institutions place orders, right? We don't have that. So it's a lot harder to, make plays based off of candles, right? Which is why we play based on reactions, which is why we play based on volume, which is why we play based on structure, right? And not just your special candles, right? So when you accumulate that, you can justify taking a position, right? But because we know that nothing is 100%, right? We can justify why we've lost as well. And that, you know, is like the psyche part. And that's what helps you move on. That's what helps you build, right? And I think once you realize that is once you actually start seeing improvements. All right, so does that make sense? Like, am I making sense?
Yes.
Yeah.
Cool. So let's see. Let's go back to the chart. But yeah, anyways, that's pretty much the rant for today. Right? You can justify why you take a trade, but just because you justify why a trade can occur doesn't mean it's going to give you a favorable outcome. Because at the end of the day, we're only playing with footprints. We're not playing with actual raw data. Which is why we're playing a game of probabilities. Right? So I guess we can leave it off at that. And yeah, I gotta go eat. I just got home from the gym. I'm starving. But yeah, guys, I guess we can end it off there. We can pick this up on Saturday.